Good afternoon. This is Chris Brecher with the Chart Patterns Mastery / Simpler Trading free video. What's today about? Well, got to tell you right now, it's all about the MACD in here and correlated indexes. Let's go into what we're talking about real quick. So I'm going to go and use Thinkorswim because I like their MACD on the bottom. I just use two lines, 3, 10, 16 simple. Now, I know there are a lot of people that ripped off the name of this. That's what I've been using for 45 years. That's all it is. A simple two-line MACD, 3, 10, 16. That means a 3 simple moving average, a 10 simple moving average, and the width of it. So all you're saying is if it widens out because the 3 moving average gets way above the 10, then you're going to get the red line to be up. The 16 is a 16 period moving average of the red. So just keep that in mind. So if this stays down and it's 16 periods lower than here, then the blue line's going to keep going down. So just keep that in mind of how that works. Now, the reason I'm showing that and I'm obsessing about is to show you this. This is the ES today. We show a lot of multiple time frames with the ES. Hourly, when I'm day trading, I like 4 time frames. I like an hourly, a 15, and a 5, and a 1. If you look at an hourly chart of the ES, it was oversold. But you need to determine if it's an uptrend or a downtrend. So I'm going to take off some of these voodoo lines. I'll show you. What I mean by that is you're looking at that ATR trailing stop and the 20 moving average during the day. For a longer term trend, I'll use the 50. For a shorter term trend, like a daily, I'll use a 50. On the intraday, I use a 20, and I'll show you. You'll be able to tell which one it is. Let's go into this. It's the blue. So the blue is the 20. I use the 20 and the ATR trailing stop combined with the MACD. So if it gets oversold in a downtrend, it's not as reliable as a bullish signal. In overbought, when it's under the ATR trailing stop, it's a big deal. So you see it was overbought, and then you go to a shorter term chart to time your entry. Well, when it's whippy like it was today, when it does that, you have to go to a 15 minute and a 5 minute and a 1 minute. So let me show you what we're talking about. So you see the overbought here. Overbought, and like I said, what is it? It's in a downtrend. When you see it overbought in a downtrend, as determined by either the 20 or the ATR trailing stop, you are then looking for a short trigger. When you go to the ES and this right here, look at the bottom, that white down here, it's 1145. So what you're doing is you're going over here to 1145 and you're trying to time the entry on the short side. That's what that trend line's for. You're not going to sell the top because you don't know if it's going to there first. You're looking for that trend change. And as you see, there's your trend change. That's where you short it. Did you get the top? No, you missed the first 10 points. You made at least the next 40. So just keep that in mind. Now, this is where it gets tricky. Overall, hourly chart is still in a downtrend. But a 15-minute chart got overbought in an uptrend. What to do? Well, the first thing is I'm not going to chase it. I don't care if it's reclaimed a moving average or an ATR trailing stop. If a time period, one time period farther out, which is the hourly, is still in a downtrend, then I'm probably not even going to play this. Now, you might say, well, why didn't you play the short side? Because it is overbought on a 15. Because, number one, other indexes like the NASDAQ got overbought, but they look like they reclaimed a big level right here. Looked like it reclaimed it. So it was overbought and it reclaimed things. So temporary was overbought in an uptrend. So I didn't touch it. So as you see on the right, that didn't tell you a thing. So sure, it sold off here, but that's extremely tough when it's at support. Also when it looked like it reclaimed. But keep in mind one thing. Some of the best money I've made over 45 years is actually buying in a bear market. That sounds really weird, but look at this rally. Well, look at this sell-off of how long it took to go down. But look how fast the rally was. That's what I'm telling you. You can make a lot of money in rallies in a downtrend, believe it or not, in a bear market. That's all I'm saying. Doesn't mean it's an uptrend now. But in a bear market, you get these vicious squeezes. So 300-point rally. Just keep that in mind. So on the right, I didn't touch the SPX or the NQ on the close. Did I get a deciding pattern? No. The big problem was the NDX or the NASDAQ, the actual index, looked like it reclaimed stuff. So once it started to waver, I couldn't go and sell an out-of-the-money call spread in, let's say, the SPX, because I was afraid the NDX would pull it up. So I didn't do a thing. So I'm going to miss things. But I warned everybody not to chase the rally. Wait to see how that overbought is worked off. Does it go back to the zero line and this stays above that support? Well, it didn't. So you don't trust it. But so we didn't get hurt. Let's just put it that way. A lot of what we do, like I've said, it's trying in your profit and loss to look like a bull market in a stock. You want to make money, lose a little. Make, lose a little. You don't want to do like a lot of sites advertise that you lose more than that. You go in a bear market because you wither down your account. So we're trying to make good money and lose a little when we're wrong. That's all we're trying to do. And that's what we're trying to grind out when I talk about grinding out. Now, what do you do for the next couple of days? Well, this is the first thing. Number one, don't believe the AAII that there's too much bearishness. Believe it or not, when you go over this was a table from 3 weeks ago. It's not a given you're going up just because there's a lot of bearishness. The other one is the CNN fear and greed is extreme fear. It's been that way for 3 weeks. On the way down, things can stay like that. Just keep that in mind. If you're in a big old uptrend and you see a quick sell-off that creates a lot of fear, well, guess what? You're identifying that you're still in a bull market. But now the conditions have changed. You've rolled over. Now you're looking to sell every rally. So just keep that in mind. But you might ask, well, how do you know there's a temporary bottom? Well, I'll show you a couple of ways I think you show a temporary bottom. Number one, put-call ratio. You got to see this sucker get above 1. Now, it shows 0.99 here. I never saw 1.1 right here. I never saw that. It's been in this zone. You see the zone. It's right around that 0.8 to 0.7 level. You see over here, there were a lot of days near 0.9 to 1. Well, if you go on the right and you look at the SPX, what was the low? The low was the spike. So the spike on the left, August 5th, corresponded with, on the right, the SPX. Survey says August. Look at this right here. Right there. So that was one measure of the panic. So, and let me make this clear though. You could have the next day 1.2. The key is to see the reversal pattern like you saw on the right. You see on how this candle is at least took back this. At least you had one. And sure enough, that just kept going. But the key was you weren't buying here. You weren't buying here. You were buying once a candle was reclaimed. And that was a mistake a lot made today. It looked like it was trying to reclaim something, but in the grand scheme of things, it wasn't reclaiming the one from the day before, was it? In fact, all the way down, you haven't really reclaimed much. Plus, the more like this, the more a candle rally is going to be against resistance. And that's the problem. So I would get much more bullish if it got over that candle. So AM wasn't over, so a bought. So right now, I'm not sure what to do other than intraday trading. So if I see this, which a lot of people jumped on earlier, and I see these little bull flags, sure, we can buy. This was too choppy in here. Couldn't tell what to do. You wait for your pitch. Have a great night. Talk to you later.
Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Sipler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.